Merkel has urged China to take action to open up its market. In a video call with Chinese Premier Li Keqiang, Merkel stressed that Beijing needs to treat foreign companies fairly, and she said that she still sought an ambitious trade deal between the EU and China. Let's get some perspective now from Harvard Kennedy School fellow and political economist Shirley Yu, joining us now out of New York. Shirley, great to see you again. Does Germany really have a choice? Does the EU have a choice, given the state of global trade? It really does need access to the Chinese market.
Oh, absolutely, Heidi. Thank you for having me. I think economically, Europe will perhaps have no choice, as you said, but to continue to fall into China's Eurasian economic orbit as global economic gravity actually continues to shift eastwards as well. So if we look at 2020, China is projected to grow at about 1 to 2% this year. German and EU GDP will contract likely about 7%. The US will contract about 5%. And so China's growth, despite 1 to 2% being as meager as it sounds compared to its own track records, China continues to be the high growth engine of the world for this year. And so where else would Europe seek growth and market other than working with China? However, I think on the political, geopolitical narrative, it's perhaps a slightly different story. China's ambition, particularly during the current President Xi's era, has always been about connecting the two ends of Eurasia via infrastructure connectivity, both physical infrastructure, but also digital infrastructure, particularly led by Huawei. And I think winning Europe is perhaps equally important for China in winning this global geo battle. Really, no other region matters more to China geopolitically than Europe, particularly Western Europe.
So does Europe have to make a choice, right, to align itself with Western democracies the way that we've seen alongside the US, the UK, to a certain extent here in Australia, and we see the fallout of that for Canberra, right? But for Europe and the EU in particular, it's difficult because it's not a binary, view that all countries take, particularly if you're talking about the likes of Italy or France, right?
Oh, absolutely, Heidi. I think it's not only not binary. EU, we cannot really see EU as a holistic whole. I think the rising tension, as we have seen recently between Beijing and Brussels, is not to be equated to rising tension all around between China and all 27 EU member countries. As we know, all 27 countries currently is really a mixed bag when it comes to relationship with China. So China has always preferred a bilateral engagement with EU member countries historically, and the Brussels on top of that. And so it's really a 27+1, very complex political architecture that China and the EU need to move through here. But China has successfully, I think, expanded its strategic investments in Europe, starting from the periphery regions, but increasingly to the core. I think the epiphany was really when Italy joined China's BRI back in 2019. And so when it comes to member countries, EU as a holistic whole and its relationship with China, I think there will be continued ideological clashes and the diplomatic spats, and that's in a way has been structurally an ongoing theme. And I think moving beyond the noise, that EU and China will have to look beyond this political noises. At the end of the day, the overarching theme, I think, between the two economies is one of a bigger story of economic integration, not only in trade, investment, but even perhaps in technology.
How different is the EU-China relationship to the US-China relationship?
Well, it's very different in the way that China is not a threat to the EU, the same way that China is seen as a threat to the United States. And also China and EU economies are a lot more complementary than they are competitive. And so I think China and EU really has a lot to complement each other. But also, Sherry, it's really interesting post the COVID-19, the president of the European Commission, Van der Leyen, she said that Europe actually needs massive investments in the form of a Marshall Plan. And I think in today's geopolitical environment, Trump's administration would be the least likely candidate to offer a renewed version of a Marshall Plan for Europe, and the most genuine and I think financially plausible partner for Europe will really be China. And it's also really in China's interest to offer a China's version of a Marshall Plan for Europe, and I think to comprehensively revitalize and reconstruct the battered economy post the COVID-19 for Europe. It'll be strategically appealing for China, but also I think it'll be financially plausible for Europe as well.
Does this mean that European countries will look past the sort of diplomatic faux pas that China committed during this pandemic?
I think diplomatically there will be continued struggles, and ideologically there will be continued struggles. But I think the ongoing theme continuing from 2020, if we were to say going into 2050, I think the bigger story is that the global economic gravity will continue to tilt towards Asia Pacific, and Eurasian integration will be the bigger story going forward, and the economic growth engine will be in China and around China in that part of the world. It's in European strategic interest really to work out this very complex political and economic relationship with China.
How much of a pressure point will be technological and data restrictions, particularly when it comes to treatment of Huawei?
That's interesting because you have recently, I'm sure you have covered how the HSBC has reviewed to the UK Prime Minister that it might be punished if the UK decides to exclude Huawei from the UK's 5G networks. So Huawei's rotating chairman recently have also said that China will not watch Huawei slaughtered. And I think that's the clear sign of saying, well, Huawei has gotten China's back. And so Germany's 5G announcement will be a crucial decision for Huawei's future, but also I think for China's global technological leadership, particularly when it comes to China's ambition of China's standards 2035. So really, some German companies who have substantial investment interests in China, let's say Daimler Chrysler, BMW, or even Deutsche Bank, might be put in similar positions like HSBC. I must say, though, that's a very, very awkward and difficult position to be in. But one thing for sure is that Huawei will become this major strategic variable in defining the future of German-China relationship.
Do you expect further European pressure when it comes to the Hong Kong issue? I mean, I know you kind of see this as a done deal, right? Nothing's going to change it, but do you still expect further pressure, particularly when it comes from Angela Merkel?
Well, Merkel will continue to address the Hong Kong issue, and she has been quite vocal about other human rights issues from China as well. And it's interesting because, as you said, that the world knows that nothing is going to change China's moves in Hong Kong. But U.S. does have some sort of bargaining chips at its hands in the sense that it does have the power to hurt Hong Kong economy, and perhaps very badly, and in a way that'll hurt Chinese economy at large. But Europe, in a way, doesn't even have that sort of power. Germany doesn't really have that sort of economic power and leverage over Hong Kong or China. So I would say talk will remain talks. I do not really see any concrete actions coming out of Europe at this point, particularly targeted specifically towards Hong Kong. But you did mention, I think, one particular agenda, as we saw currently in this Premier Li and German Chancellor Angela Merkel's meeting, is a talk about China-EU investment treaty. And I think that negotiation has been going on for years, and it's expected to be concluded by the end of the year. And so that investment treaty hopefully will give EU some more market access that the European Union has been hoping for, and perhaps mirroring some of the key terms as agreed in the U.S.-China Phase 1 trade deal. And so some of the key items might include, currently U.S. investment firms can set up wholly owned subsidiaries in China. There are specific clauses on IP protection, and also there are currency stability clauses. And I think all of these can be and should be offered to the European counterparts. But market access is an interesting thing. It goes both ways. And I think that particularly as China, this whole investment treaty has been under negotiation for years, and all of a sudden now China really wants to expedite it to have it completed by the end of the year, because as the U.S. Continues to propose laws to limit Chinese companies listing on the U.S. stock exchanges as the U.S.-China economic war continues to escalate, China will continue to seek a global capital market access in Europe as well. I think most prominently in London, but also now in Frankfurt and Paris. China's higher major electronic manufacturer is currently listed on Frankfurt Stock Exchange. And so we sort of can see a glimpse of hope, I would say, of what's possibly coming.
Will the relationship with Europe be able to offset some of the decoupling that China is already facing with the United States?
Oh, absolutely. I think this Eurasian integration is a major theme going forward, and it's really in both China and the larger European interest to ensure that it happens. And I think if we look at the 2019's trade, particularly after the all-out outbreak of the US-China trade war, China's trade volumes with Europe has increased. Well, also China's trade volumes, I should say, with ASEAN countries have also increased. And so this is the bigger story of the recalibration of the global supply chain. The lower ends of the Chinese supply chains are going to go further down to the more emerging markets in ASEAN, but also the upper end of the Chinese supply chain will continue to be integrated more with Europe.
Right, Harvard Kennedy School Asia Fellow Shirley Yu, thank you very much for joining us.